How dovish will Mario Draghi be today? Good morning.
Good morning. I think he has to be quite dovish. I think there's growing expectation that, that the inflation is building, and that the time for sort of unorthodox, extreme monetary policy is now coming to an end. We're not talking about, a change or an actionable cutting of the amount of asset purchases or increasing interest rates, but we're just talking about being less dovish. And I think, given the inflation that we're seeing in Germany, what we're going to see today is that in the European Court, that we will start seeing pressure on him to change the current monetary policy.
Peter, Neera just looked at a chart. I know we're in one of those sort of rather bizarre positions. You're in front of a camera and I'm here. But to tell you what it is, it's about basically the market throwing in the towel on their short positions. I'm just going to show it to our viewers here, which is basically the longest short that we've had for many, many years. Hedge funds are close to exiting their bets against the euro. This is the data beats the United States of America. I'm talking about the economic surprises in Europe, trumping, excuse the pun, but I like one on a Monday, trumping the surprises in the United States of America. Are you throwing in the towel on a short euro position?
I think it's a good time to start reconsidering. I think, number one, that comment by Merkel was a very strong suggestion that she wants change in the ECB. Number two is the data out of Europe continues to put pressure, despite the fact that Draghi claims the inflation rates are transitory and they'll see lower inflation. It means that, the ECB is in the driver's seats when it comes to interest rate differential or monetary policy differential. And with the Fed sort of looking less likely to increase rates more than one more time in 2017, I think the emphasis goes back to Europe and a stronger euro.
A stronger euro, even though Williams, we've just heard from Williams, Linda's going to sit down with him in just under an hour's time, and I suppose push him a little bit more. He would be an advocate of 3 more hikes in the United States of America.
Yeah.
Do you think that that's still just too far? Do you disagree with the Goldilocks scenario that we've heard this morning?
So let me, if he said 3 hikes in 2017, meaning 1 in June, 1 in September, then and 1 in maybe December, that's reasonable. But if we were talking about 3 more hikes after June, I think that's way out of line. We're looking for 1 in June and maybe 1 in September, though the probability of that is declining rapidly, considering that the U.S. economic data has not really recovered. And despite the strong labor markets, we're not seeing follow through into wage growth. And the likelihood of Trump really putting forward a pro-growth agenda and accelerating the U.S. growth story is very unlikely at this point. So, we would discount a lot of what he's saying if he's really putting out 3 or even 2 more rate hikes.
Just circling back to the Draghi and the European Central Bank, Peter, he has this prime excuse in terms of the riddle. I'm missing my inflation target. He's got a time buyer on his hands, hasn't he? We were all focused in just a couple of weeks ago on whether the language would change in June. Some people are now saying that might happen in July. But the data sort of supports him playing for time, doesn't it? And that's what's coming through. Just going to show our viewers here. We've got a couple of charts for you. Euro area core inflation is off its peak. Consumer prices, the gross number, is off its peak. So he has got the ability to play for time. The data does support him. Does it knock the theory that the ECB will go for a change in language, Peter, into the longer grass of this year?
I mean, it does. It gives him more time. But, what we're talking about is an extremely gentle change of language. Just the acknowledgement that quantitative easing is less likely to increase. Just even the change of language that interest rates are less likely to go more negative. It will be a signal that, change is coming. So on one hand, the data supports not moving forward with any strong movement. But on the other hand, the data supporting that there has to be some acknowledgement that in the future, these extreme monetary policy tools have to come unwound. And that's what the market's looking for. That's what it's betting on. And I think it's going to be very difficult for Draghi to even sidestep this type of signaling.